over the next 2 days. Thanks, Sumita, for joining us. But let's shift focus back to equity markets then. And one stock that is locked in upper circuit of 20% on the back of its results is Balaji Amines. Very strong set of numbers that it reported for the fourth quarter. Revenue has seen an increase of about 12% on a year-on-year basis, and margins, they have expanded from 8.5% same time last year to as much as 25% in the fourth quarter of FY26. So what led to that, and what's the outlook going forward? To discuss that, we are now joined by the Managing Director of Balaji Amines, D. Ram Reddy, who is now joining us. Mr. Reddy, afternoon. Thank you so much for joining us today. And first of all, congratulations on the strong set of numbers that you have reported. But take us through your perspective on what the quarter looked like, what led to this kind of growth, and is this sustainable in FY27?
Yeah, see, actually, in spite of the geopolitical situation in the world, we could do better because we have perfect maintained the inventory positions. We could maintain the margins like this. As I said earlier also, for the industries like us in the specialty chemicals, the sustainable margins will be 22 to 24%. Even though we came up to 25 to 26% for this last quarter, but I give the guidance for the entire year, it should be between 22 to 24%, which is sustainable.
Okay, so EBITDA margins are sustainable between 22 to 24%. And what will your revenue growth guidance be, both in value and volume terms? Because at the end of second quarter, you did tell your investors that you are targeting 15% growth. Are you maintaining their guidance, or are you looking to increase that guidance?
Yeah, because of these situations, the volumes have gone same flat only. Only because of the prices have increased, because of the high values, the value growth you will see. But going forward, this year, there are three large things are happening in our company. The number one, in this quarter itself, we are going to launch the product called dimethyl ether, which is alternate to LPG. We are going to launch in this month end only. And the second thing, there's a product called acetonitrile with a new plant, with the modifications, with the latest technology. We are going to launch in the second quarter of this year. And third is N-methyl morpholin. Before end of the year, we are going to launch that product. Apart from this, in the subsidiary end, we have the one modification product, which is going to happen in the end of the second quarter and start of third quarter. And the new greenfield expansion for the cyanide, hydrogen cyanide and sodium cyanide products. This is also happening by the end of the year. These are all the activities going to happen in spite of the hurdles in the market. We are continuously in the expansions, and you will see the end of the year, all these plants will be in stream.
Okay, I understand that the CAPEX is on track. All plants will come on board by the end of this fiscal. But then what will the guidance be? One, for FY27 is 15% intact. And once all of this is on stream, what will the guidance be for FY28?
See, it will be between 10 to 15% will be there. Margins will, growth will be there in the top line. And bottom line, as I said, between 22 to 24%, we will hope we will maintain that margins of the EBITDA margins. And 2028, we expect that there should be minimum 25 to 30% growth in the volumes. And also, total turnover, we aim to cross around, if the prices goes like this, 3,000 crores in the top line in the 2028. And 2029, it should be 4,000 crores.
4,000 crores of top line in FY29. That's the guidance that you're sharing for the next 2 years. Wanted your sense on raw material pricing. I understand that cost of raw material has jumped this time around, but partly that could be because of surge in volumes that we saw in the fourth quarter. How much of this was because of raw material price increase?
See, this is that's the reason I'm telling you. If you go for the volume wise, it's a flat. And whatever the value growth you seen is because of the raw material prices and as well as finished product prices have increased. And we expect if the situation improves, the top line will be, as I said, it will be 10 to 15% growth in the current financial year, and will be minimum 3,000 crores in the next financial year. because of all the new products coming in the line by end of this financial year.
And Mr. Reddy, one last question. Are you seeing any impact of China's involution measures, any impact on India's industry here?
Yeah, definitely. There is a major, the biggest beneficiary today is the China in this present critical situation. But luckily, in our industry, the amines industry, only few products are competing with the China, because other main products like methylamines and all, they falls under the license. That's the reason it will not give much impact on the methylamines and ethylamines. There are few products like dimethyl formide and NMP and butylamines, which are giving impact because of the China's competition. But because of the raw materials from the other sources other than China, we are in a position to compete for those products also.
Understood. So that's as far as outlook is concerned. Mr. Reddy, thank you so much for taking your time out and joining us here in ET Now and being candid and sharing your revenue target for FY 28 and 29. Thank you so much for joining us today. But that's all the time we have on this edition of the show. Thanks so much for tuning in. We have another show that will take you through all the market action.